So this is a stock that I talked about before. I did an analysis on it and I determined that the stock is undervalued, which is very rare for me to actually say that I believe a stock is undervalued, but I really meant it with HZO MarineMax. And normally when I say a stock is undervalued, it goes down like 15-20% first. But this one actually went up around 10 to 11% after I did my last video. And they recently reported earnings and the stock went down like 11% in one day. And it's back at the same price of when I talked about it. So I decided to make another video on MarineMax as I still believe the stock has a pretty good value proposition and it still looks undervalued to me, but there's some things that we have to pay attention to that could potentially lead to it being some type of a value trap. And I had the same thing when I was talking about Crocs before it went up 100%. It was pretty much the same situation with MarineMax, and then Crocs proved itself that it could actually, make good out of the acquisition that they did with Hey Dude, and then the stock went up like 120% in 6 or 7 months. And I believe MarineMax could be the same type of story, but it could also be a value trap. So we're gonna determine that in today's video. So as I talked about it before, MarineMax is a company that owns marinas and around 57 around the world. Most of it is on the higher end type of thing. This is what they focus on. Over 80% of their revenue is from new and used boat sales. The other part of their revenue, which is where they are trying to expand as it's higher margin and it's more stable and less cyclical, is more in the service, repair, maintenance, storage type of things in the broker and finance and insurance, parts and accessories, and a couple of other areas where they are trying to focus on. Now, MarineMax is not a dying company, and as you could see from 2015, they grew their pre-tax profit around 44% compounded every single year, which is massive, massive growth. And even the revenue growth, it was up around 16%. So it's not some type of a cigar butt type of investment. It's actually a growing company, and they have a very, very good track record of acquisitions where, they acquire those companies and for pretty cheap prices, and then they turn them into something huge, and it contributes a lot to their revenue. And they recently acquired the popular acquisition, which was IGY Marinas, and this is one of the reasons why the stock is actually depressed. And we're going to talk about it a little bit more in this video. But as you could see from their acquisitions, they are trying to focus on higher margin stuff, like the marinas, which is, this is one is on the yachts, the higher end. Super yacht for services, technology, motor dealers, super yacht services. So they are trying to focus more on the higher end, and MarineMax is already pretty much not on the low level of boat sales, as their average boat price is around $300,000, and they are trying to expand into the super yacht category, so they have more stability and higher margin business going to an uncertain future. But MarineMax was very successful with those acquisitions. They have pretty high return on capital, around 25% for 2022, and it's on average around 15 to 20%, which is huge for this company that's only trading 4.5 times earnings. I mean, normally whenever you have a company, generating, 15, 20, 25% on capital, it would be trading like a 15, 20 type of PE ratio, but MarineMax is only trading 4.5 times earnings. And this is the acquisition that I believe actually suppressed the price. And this was IGY Marinas, where they paid $480 million for this acquisition, and they're going to earn around $100 million of revenue for the next 2 years. But now I believe they're only earning 20 to 30 million of EBITDA, which means they actually overpaid for this acquisition. This is what the market actually believes. But again, we can't judge it early, as they might be able to turn this acquisition around. But I do believe they actually overpaid for it. But I would be more concerned if I didn't know that they have such a good track record in terms of acquisitions. So it's really hard to judge them early on this, but they most likely overpaid. But again, they got pretty amazing locations around the world, and they got more and more exposure to a very high-end industries that they didn't have exposure to in the past. So we have to wait on them before we can really judge them on this acquisition. But again, 2022 was an amazing year for MarineMax. They grew revenue, gross margin is now around 34%, close to 35%, which is a massive, massive expansion. As I said, they are trying to focus on the higher end, higher margin type of businesses. Their EPS grew, the pre-tax profit grew. So it's been an amazing year for MarineMax. But this is why the stock is down, and this is why it had around 13-14% short interest on the stock, which is very, very high. As you can see, if you just look at this graph, I mean, they went from 100 million in 2020 to 261 million of pre-tax profits. Now, whenever you look at that stuff, you might think that this is some type of a bubble, that because they made so much money in 2022, this is hard to be sustained in 2023. A lot of people retired and bought boats in 2020, 2021, 2022. So this is why they were able to make massive, massive amounts of revenue. And many investors believe that in 2023 and beyond, this growth is going to slow down and the pre-tax profit are going to revert to the mean of around 150 to 200 million, which is the main risk with the company, because 2023, I mean, it's a slowdown, it's a global recession, and MarineMax is already starting to feel this pressure. Now, revenue did increase 7% in the Q4 of 2022, but again, as a result of the current macro environment and some supply chain challenges, the same store sales declined a modest 1% of the quarter, compared with an increase of 9% for the first quarter of 2022. So from an increase to 9% to a decline of 1%. Now, a decline 1% is no big deal, as, I mean, we're going from a peak season and going into Q4 from the big boom in 2020 and in 2021. But again, it's still a decline and it's not a good trend. And this was one of the reasons the stock went down, around 11% on the earnings day. And another reason why it went down a lot on the earnings day is because if you look at their contract liabilities, the consumer deposits, they are declining and they started to decline. Now, the main reason I actually like MarineMax is because they have a backlog that's enough for them to get through 2023, which I believe is going to be the worst year for them. But based on everything that happened in Q4 and slowdown in the economy and a lot of things that they saw, they lowered their guidance to 690 EPS, between 690 to 740. Now, if you just take the lower number of around $7 of EPS, which normally what MarineMax did in the past, they always lower their EPS so they can beat it later and help the stock price. And I have noticed that many, many times from the management. But again, just using a $7 EPS, this is around a 4.5 PE ratio for the company, which again is very, very cheap in my personal opinion. But the big challenge, as we talked about, is the declining consumer deposits. I believe is going to get better for them in the future. But the question is, can they really get through 2023? And I believe they can. And their balance sheet, it got a little bit worse lately, but they still have around 177 million of cash. Now, their long-term debt is around 415 million, mainly from the acquisition. And with the backlogs that MarineMax actually has, I believe this is very, very sustainable. Now, there are a couple of things that could play out from this assumption for us to determine if MarineMax is actually a buy or not. As we looked at their previous, years, they were able to grow revenue massively because of massive acquisitions. All right. Now, let's assume for the first case scenario that MarineMax does pretty much nothing, meaning they can just sustain their revenue in 2023. 2024 gets a little bit better as we get out of the recession. We go into an expansion mode type of economy. But let's just assume that it just stays at $7 for 4.5 years. This is around a double in 5 years on MarineMax in terms of the PE ratio, trading at 4.5 times. So in terms of MarineMax not doing any acquisitions, not growing, that this just sustains the $7 for 4.5, 5 years. This is a double in 5 years for MarineMax. Now, what I personally believe is going to happen is MarineMax is going to beat this EPS in 2023. 2024 is going to be a better year for them, and then they're going to keep on doing those acquisitions and growing the revenue every single year. And after we actually get out of the recession and the recession fears go away, MarineMax will actually actually trade at an 8 to 10 PE ratio instead of just trading at 4 and 4.5 times. I believe this is largely due to the uncertainty around the acquisition of IGY Marinas. I believe there's a lot of uncertainty around this, the same things that happened with Crocs whenever they acquired Hey Dude. So a year from now, if we get out of the recession, if MarineMax can just sustain this EPS and 2024 is a better year, they can actually show that IGY Marinas provided a lot of value for shareholders and they made the best out of it. I believe it could realistically get a multiple expansion from 4.5 PE to 8, 9, even 10 PE ratio. We could still be argued that for a company that has been growing, 16% compound every single year, you could actually say that it's still undervalued at a 9 or 10 PE ratio. But this, in my opinion, is the base case for MarineMax, which could actually put in more than a double on the stock in a year or two, in my personal opinion, if things play out the way I'm saying. But again, this is not even the best case scenario, because the best case scenario may be MarineMax can actually double their EPS if they keep growing 15 to 20% every single year 5 years from now. And if they get a multiple expansion, you're talking about massive upside on the stock. So there's a lot of different case scenarios. Now, the worst case scenario for MarineMax, in my opinion, is they are actually not able to deliver on the EPS estimate and they have to keep revising it lower as we go into 2023 and 2024. They have no recovery in their business, and then the stock sells off another 20-25%, which could take it as low as $23 per share. But I still believe this is an unlikely scenario, but it's actually, very possible. But if you're buying the stock at 4.5 times earnings, I believe a lot of bad news is actually, priced in. But this is what happens with such stocks. They could be, a value trap where there's a good reason why it's trading at only 4.5 times earnings. So it does require a lot of research, and it's mainly a bet on the economy, and it's a bet on the management on how they actually handle this situation. So there's a lot of uncertainties in the stock, but I personally believe it's worth the risk reward. And then maybe if it goes to $23, maybe it's a good time to actually average in the company and then just, holding it for the long term until maybe they get a multiple expansion to 9-10 PE ratio. But if they can actually double the EPS again from now till 2027, this could be a 3-4x on the company. But if they can't deliver on the EPS estimate in 2023 because of a lot of demands that they had, in 2022, as we can see in this chart, then the stock is going to sell off, and then it's just, a value trap, and you could lose 20-25%. So it's a weird analysis on the stock. It's not how I normally do it, but the stock is cheap, and I believe, it has a lot of rewards, but it also has a lot of risks and a lot of uncertainties that we can't really factor in a DCF and we can't really control. So it's more of a common sense analysis, in my opinion. But at 4.5 times earnings with such company, with such management, I believe the company is still undervalued, but there's still this risk that they can't sustain the EPS and maybe it falls back to pre-pandemic of around $23 per share. So this was my video for today. I hope you do your own research and assess for yourself if MarineMax is a good buying opportunity for you or not. But I still believe it's undervalued, and I hope you enjoyed this video. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.